Welcome back. It's lots of corporate interactions lined up on the show today. So BLS International is the next one, reported the Q4 numbers. Strong growth momentum seen in the quarter gone by. Shikhar Agarwal, Joint Managing Director at the company, is now with us. Shikhar, well, currently there's been a lot of global uncertainty. People are cancelling their, travel plans. There's hesitation to go even to the United States. How are the demand trends and the client confidence looking like? And what could be the growth that you will clock in the coming year?
Basically, see, if you see the global scenario right now, we as a company operate in 70 plus countries, and we work with more than 40 client governments. So essentially, we have seen since we've been in operation in 2009, every year there is some policy changes in different parts of the globe, but it has not, has any effect on our industry till now. We have always seen a growth in visa volume, people traveling to multiple countries, the tourism business, student, etc., increasing. And as you see, because of the scenario in the world, actually more regulations have coming, more visa requirements have come in different parts of the world. So we are, in fact, not seen an impact on, only a positive impact on our business till now. If you see our numbers this year, we've done a increase of EBITDA of 82% compared to last year, and our revenue has also gone up by 30%. So I feel we have not seen any impact on our business. We are working with multiple governments across different parts of the world. But being an Indian company, we are very proud of that.
Shikhar, your visa revenue growth was around 19% this time around, and your net revenue per application also grew by 26% from last year. What pulled the revenue to 19% when realizations were up 26%?
So if you see, as I said, if you see the overall numbers of the company, our EBITDA has grown 82%. It's 629 crores now compared to 345 crores last year. And if you talk specifically of visa business, our volumes have grown to 9.83 lakh, which is a 38% increase compared to last year. And the margins in visa business have grown from 20% to 34%. There has been a good increase in visa volumes, visa business, etc. There are a variety of factors to that. We also did a lot of things like changing from a partner-led model to our own operations last year. We got increase in prices of our service fee. Our economies of scale kicked in. There were increased adoption of different services like mobile biometric, etc. Also, the acquisitions that we did, we synergized some of those countries. That is why we see an uptick in the visa business.
Okay, uptick in the visa business. So just to put it all together, what's the growth expected in FY26 for the visa business?
Growth has been, if you see on EBITDA level, we have grown 82% compared to last year. So this 90% of the revenue comes from visa business. And, year before that, we were at 200 crores. So we've already, last 5 years, we've had more than 90% CAGR growth in terms of our profit, from our visa business itself. Going forward this year, there are multiple things, in the pipeline. We are looking at multiple tenders that we are bidding for across the world. As we mature as a company, governments have more acceptance of us as an Indian company. There are multiple contracts that are coming up. Governments want more players to deliver services. So we feel that we want to maintain the trajectory that we are at. We've done few acquisitions in the last 1 year. We've done 1,000 crore plus acquisitions. And if you see, we again have around the same amount of money in our books, as of 31st March. So we feel going forward, our immediate priority is to maintain whatever we have achieved first, maintain the EBITDA margins, maintain the PAT, etc., and then build on top of that. So if you see, there are multiple contracts that are coming out, the companies that we have acquired, some of the operations have been synergized, some still need to synergize with us. So there is multiple things that are being worked on. On top of that, we are always open to more inorganic opportunities in the future as well.
But Shikhar, since we are on the subject of acquisitions, what have these acquisitions contributed to you in FY25, be it iData, Citizenship Invest, and Aadifidelis? What kind of growth are you expecting from them in FY26 now?
So if you see, one important factor to note in our results is that, our EBITDA that has grown 82%. 60% of the growth has just come from the organic business because we acquired these companies at different timelines in the year. So full year revenues have not come from these acquisitions itself. Last year also. So only 20% of our growth came from, the profitability of the acquisition. 60% was all organic. So we feel that this year and years, the future years, we want to maintain the growth trajectory. There are multiple opportunities in the world, billions of dollars of contracts that we are bidding for. As we grow as a company, as more cash develops, we are always looking for opportunities where we can buy more, integrate to our existing system. So, I mean, we will maintain healthy growth momentum in the next few years as well.
Margins too have come off in Q4 to about 25% versus about 30% plus in the prior 2 quarters. What impacted margins in Q4 and in FY26 do you think can revert back to 30% plus margins?
See, if you see the margins in the visa business have grown to around 34% compared to 20% last year, which has been a growth of 14%. If you see the consolidated margin, they are now at 28% compared to 20% that we did last year. There has been a little dip in the consolidated, overall basis because the digital service business, the margins are a little lesser. But I mean, our target is to maintain the margins that we have achieved of 28%, but going forward, that is the immediate target.
Shikhar, while the digital business saw a strong growth, but the margins have come down to about 15.8%, so the 120 bips contraction compared to last year. What's the outlook on your margins in this segment?
If you see the digital business, which is BLS e-services, the company that we listed last year is performing superbly well. If you see the revenue has grown 71% compared to last year, which is 540 crore this year. The EBITDA is now 60 crores, which was 45 crores last year. So there has been a 32% growth in the digital service EBITDA and 70% growth in the revenue. We've added a lot of new banks. We've added a lot of touch points across India. So we feel that the EBITDA margin in digital business is a little lesser than the visa business because of the factor that we are operating in India. There is, per user, we get less money, but there is a lot of volumes. So our immediate objective as we grow as a company, as we add more services to the existing customers like insurances, etc., more value-added kind of services, then the margins will definitely go up. But as a whole, the revenue has grown up 70%. The EBITDA has grown 32% in digital business. So we expect to maintain the momentum even in this business.
Okay, and what about more acquisitions? You did a few last year, but you still have about 928 crore of cash on your books. More to go? More on the anvil?
If you see, last year we acquired a company called iData, which is into visa services in multiple countries. Citizenship Invest, which is a long-term resident visa company based out of Dubai. Then RD Phyllis Loan Solution, which is a big loan distribution company in India. So we did thousands of crore of acquisition that, we are just synergizing these companies with our existing operations, making sure that, the multiple that we paid, we earn the money, earn the cash much before. So that is our target. But as this business is a negative working capital business, the cash keeps on generating. So we are, even if you see the dividend, we have declared 100% dividend this year in spite of 1,000 crore of acquisition. So going forward, we are looking at different opportunities, in the field where we operate in synergistic fields across the world in service industries, which is a user pay model, negative working capital, healthy multiple, adjacency to us. Where we can build on and value add. That is what we're looking at.
All right, Shikhar, thank you so much for sparing time and joining us today. Wish you good luck for the rest of the year as well. The management there of BLS International. On the other side, we